Joe, good to see you.
Alex.
The story just specifically with earnings going into this is that 2019 is a year of transition. 2020, you're going to have more growth drivers. Did you move that profile ahead, or is this a different turning point?
I think it's a little bit of both, quite honestly, Alex. If you think about where we started the year, we had significant projections with respect to loss of exclusivity on some major products for us. We've been able to hold on to those a little bit longer in our pharmaceutical unit, but I would also say we're ahead with respect to our medical device unit. 5.3% growth when you strip out acquisitions and divestitures and currency impact. That's the best quarter we've had since 2015, so that turnaround plan is in place. And then we're very focused in consumer with detailed efforts on skin health as well as over-the-counter medicines, as well as improving profitability. So it's a combination of both.
Yeah.
We do expect to grow above market, though, in 2020 as well.
So for medical devices, though, how do you then understand what's going to happen with the Affordable Care Act, put a moratorium on the tax for medical devices, but that could be up this year? What's your expectation then for next year? How does that play into your growth forecast?
Yeah, so the tax would be, I would say, a side event to the growth profile. If you look at the execution that we've had, Ashley McAvoy and her team in medical devices have done a nice job focusing the portfolio. We continue to do well in interventional solutions, so that would include stroke and electrophysiology for the heart. Our surgery unit continues to perform. It's best in class regarding industry performance and acceptance in the hospitals. And what we've really made a noticeable difference is a stabilization in our orthopedics unit, which before was detracting from growth.
So how do you then factor in the litigation risk into your outlook?
Yeah. So right now, if you think about some of the cases that are out there, they're, I would say, likely subject to our prevailing on appeal. So there's nothing to book, nothing to accrue at this point. It wouldn't even meet the accounting standards. We're continuing to go forward with that. With respect to our capital allocation plan, we're going to look to increase our dividend and make acquisitions when they're value creating.
So what would be a good resolution for you on all these cases? And because you outlined what you said in terms of you're pushing forward, wouldn't a settlement make more sense for some of these?
Each case is unique. So if you just take last week's news with the Risperdal, U.S. Supreme Court precedent suggests that that will not stand up, nowhere near the award that was announced publicly. With respect to talc cases, there were 3 cases that were ruled in the favor of the company just last week, but we don't hear about those headlines the way some of the losses are. And there's not one case that has been fully adjudicated where judgment is standing against the company. With respect to opioids, you've seen 2 different paths from us. So in Ohio, where we found a reasonable settlement to be had, we did that. In Oklahoma, where the case of the theory of law as well as the facts being somewhat ignored, we thought that that was best to proceed and defend our rights in that case.
What we can agree, though, on is that Johnson & Johnson has underperformed the whole group, in part because of his litigation overhang. What are you going to do to incentivize investors to invest in J&J when, even if you're saying you can take care of it, it's still billions and billions of dollars that could be at risk that prevents you from doing something maybe like a buyback, that prevents the focus of the company from doing something else? What do you say to that? Yeah,
well, we just completed a buyback for $5 billion, just completed that within the last quarter. I think investors are starting to come around. They're starting to get an appreciation and better certainty around the level of risk that actually is within the stock. The best thing we can do, Alex, is continue to perform the way we did in the third quarter, the way we have in 2019. That really does bode well.